Hello everyone, welcome back to Stormwall.com. It's late May 2022, and wow, is there a lot going on in the world. It's been a tough few weeks for all financial markets, and crypto has been no exception. Bitcoin has proven to be much more correlated with the stock and bond markets than most people would have expected and was the case in the past, which tends to undermine one of the original pillars for crypto's investment thesis, but I'd argue it's not a terribly important one. For context, over $1 trillion of value has been lost in crypto. Bitcoin is down 30% and others 50 to 60% in the past few weeks. In fact, Bitcoin sits at less than half of its all-time high in November. So definitely an ugly bear market. Aside from the general market downdraft, this crash was precipitated by the failure of the Terra Luna network, an algorithmic stablecoin linked to the US dollar. Now, stablecoins are intended to be largely secure and to hold their value against a peg. For example, to always be worth $1 or some other reference currency. But this one had a fatal design flaw that someone figured out how to exploit. Not surprisingly, crypto detractors use this as evidence that crypto is a dangerous scam and it needs to be more strongly regulated, if not completely outlawed. Not surprisingly, many of these voices are vested interests, either heavily tied to legacy financial institutions or they're regulators who never saw an investment that they didn't want to crush under mountains of paperwork and red tape. Christine Lagarde, the president of the European Central Bank, which is the European Union's equivalent of the Fed, recently called crypto a menace and worth nothing. Alongside many of her US colleagues, Lagarde used the crash to call for substantially greater regulation, as did the US's Security Exchange Commission chairman Gary Gensler, and many others, apparently singing from the same hymn sheet at the moment that the conductor brought them to order. Away from the regulators, many legacy financial media pundits used the crash to predict crypto's imminent failure. These I told you so voices have forgotten how in 1992, George Soros successfully shorted the British pound sterling, one of the most venerable and trusted fiat currencies in the world. Soros and other traders brought the Bank of England to its knees and forced the British government to pull the pound from the European exchange rate mechanism. But no one then seriously suggested the world should abandon its currencies. Now, in both cases, it was the unrelenting forces of market competition exploiting a backdoor weakness in the currency's defenses that broke the pegs, not an inherent flaw in either traditional fiat or novel cryptocurrencies. The critics also failed to mention that the pound not only recovered relatively quickly, but eventually came back stronger. I'd argue that the same is likely true for crypto as a whole, without getting into who will the winners and losers be, and there'll be many losers. But wait a second, isn't crypto used by criminals and terrorist organizations? Well, yes it is, but so is cash, and in massive volumes that dwarf the illicit use of crypto. So are they suggesting that we also eliminate all cash? Well, funny enough, that is the plan that many governments seem to be on. Governments are highly motivated to move away from cash and to bring crypto under their control. Why? So that they can surveil every transaction everywhere, much as they're already seeking to do, illegally in the US, I might add, with our digital communications. Governments' plans include to issue their own central bank issued digital coins. China's already done it, the US is in process, others are working on it. But make no mistake, government-sponsored central bank-issued digital coins are nothing more than a tool of the surveillance state to enable total informational awareness and control of every aspect of their citizens' financial and thus private lives. So on the one hand, we've got a lot of negatives, but if crypto is dead, someone seems to have forgotten to tell the industry. While embracing the term bear market, the sector seems remarkably upbeat, enthusiastic, and forward-looking. Many participants seem relieved that the get-rich-quick speculators and momentum day traders have been flushed from the system and that only the true believers remain. They're basically saying, yes, it is a bear market. Yes, it's bad. But now we can focus. So let's get back to work on building cool stuff and being productive and stop being distracted by token price speculation and trading. Indeed, the industry seems more convinced than ever that crypto represents a much-needed and bloodless financial revolution. Now, one reason for this is that the political and economic events of this past year, 2021, have strongly, in 2022, excuse me, both years, have strongly reinforced some of the original motivations behind crypto, including the need for financial decentralization, disintermediation, and transaction immutability, along with the right to own one's data, online privacy, and individual autonomy. First, rising inflation around the world has underscored the conviction, commonly held in the crypto community, that the fiat currencies and their enabling institutions are doomed, sooner or later, by rising exorbitant levels of government debt, and that digital money or assets not intermediated by the central banking system will form the backbone of an alternative economy and provide a way to preserve wealth otherwise to be devoured by inflation. Secondly, economic sanctions and asset seizures that we've seen this year against both, plutocratic Russian oligarchs, humble truck drivers, and nonviolent trespassers have each, in their own way, confirmed to everyday people around the globe that their wealth is not safe from arbitrary government confiscation so long as it remains in the traditional financial system. Third, the rise of cancel culture and social media censorship and government censorship has proven the need for data ownership, self-sovereignty, and autonomy away from big tech and the legacy financial platforms. Now, those are a few. There are many other reasons why I think that there is a future in crypto, at least in the medium term. No one knows the long term. Yes, it was a rough few weeks, but crypto's far from dead. And one of the reasons for this is that these companies investing in technology and platforms in the crypto space, in DeFi, Web3, they're now flush with cash. They successfully raised tens of billions of dollars in venture capital before the wheels fell off. This massive store of financial dry powder will continue to attract the best talent away from Wall Street, away from traditional industries, and even from legacy tech, big tech. It's going to enable the strongest companies and protocols to consolidate their positions through both external acquisition and internal product development. Now, as someone who's not a crypto native, I was a late bloomer. It took me a long time to get the relevance of what's happening here. But I've concluded that we are in the middle of a revolution, or perhaps better said, a renaissance, that is going to transform everything from finance to economics to government, politics, even democracy itself. These big shifts in history are hard to see at the time, but we're in the middle of one. As a reminder, the first generation of cars were slower than horses, but we all know what happened to the buggy. So I suggest we embrace the inevitable. I hope you enjoyed this and maybe learned something. If so, give it a like, share it, and subscribe to the Stormwell channel on YouTube and sign up for the mailing list on stormwell.com. Thanks everyone, we appreciate you. We'll see you next time. Bye-bye.